Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Kickstart video. The Kickstart video, I take a look at three of the major currency pairs of euro versus US dollar, dollar versus yen, and sterling versus US dollar. Today's date is June 21, 2024. Let's get started. All right, looking at the euro versus US dollar, I'm focused here on the 4-hour chart and trading yesterday. When we came in at this time yesterday, we were trading above and below this 61.8% retracement of the move up from this low going back to April to the high price that we saw in early June, that 61.8 came in at 1.07208. We were also trading above and below this swing area. This swing area was defined by a number of different swing lows and swing highs going back in time. These are some of them where the price on the 4-hour bars either found support or resistance against these levels. So you can see that this area right through here was more of the floor here. We moved below the floor in trading last week and then moved back above it and traded above and below it and trading here this week. As mentioned in yesterday's trade, we did trade above and below it for part of the day, then closed below that level. What is key, if you focus in here at the high price for today, was that the price did hold against the low of that swing area and also the 61.8% retracement. That was a barometer for us going into the new trading day. As long as we stayed below that level, the bias remained to the downside. Indeed, it did, and the market rotated back to the downside. We just have weaker PMI data, which helped to move lower in trading here today. But that level, holding that level, was a good tell for traders that the price could go lower. The low price that we did see did fall short of our low price from last week, however, at 1.06668. And we are seeing a little bit of a modest rebound back to the upside with the current price trading at 1.06902. Maybe this level going back to here might be a level of to watch in trading here today, but certainly this area up through here is for traders who are looking for a lower euro. You don't want to see the price start to move above the 1.07198 up to 1.07346. If it starts to move above that level, then this break to the downside is for naught, and the I would expect the buyers to come back in the euro versus US dollar. Until then, the bias remains more to the downside for this pair from a technical perspective. Let's take a look at the dollar versus yen. And despite the chatter from Bank of Japan and Japan officials, the dollar versus yen did extend further to the upside here. They're concerned about the weakness of the yen. In trading yesterday, the price moved above this recent ceiling here between or near the 158.25 level. We had two highs near that level right through here. As you can see, the price came to that level right here and then based against the level, and what more importantly on the corrective move to the downside right here, found support against the level before moving to the upside. So the buyers running away from the from this 158.25 level, which now also happens to be the 38.2% retracement of this move to the upside. So if the sellers are to take control, they need to get back below this 38.2% retracement, back below this old ceiling right through here in the short term. And as you can see, the 100-bar moving average is also moving, or 100-hour moving average is also moving higher in a few hours, or by the end of the day, that moving average should be right near that 38.2% retracement. So a good rule for traders looking for more upside in the dollar versus yen is don't go below the 38.2% retracement. Don't go below the 100-hour moving average. Don't go below this old ceiling level right here. As long as the price remains above that level, it's more bullish. In the shorter term, gets a little more choppy, and the price action is choppy here today. If you look at the 5-minute chart, in trading yesterday, the price stayed above the 200-bar moving average on the 5-minute chart right here and right here, and this break right here didn't get close to it. These breaks through here couldn't get through. We did so finally start to show some chinks in the armor with the break of the 200-bar moving average here as the price consolidated over extended period of time in the Asian session, then moved down to test the 38.2% retracement of this move to the upside from yesterday's trade before bouncing to the upside. Now we see the 100 and 200-bar moving average moving sideways, which is indicative of a market that's trying to figure out just in the short term where we want to go. We know so be aware of that dynamic, and maybe watch this 100 and 200-bar moving averages, little barometers for today's trading. we are in consolidation phase here at the highs, but we know from our hourly chart that the breakout to the upside right through here near the 158.25 level was real, and we know that because the market came down to retest that level right here and found the support buyers. So that's the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. I'm going to focus on the hourly chart in this currency pair, and what we can see off the hourly chart in trading yesterday, we fell below the 100-hour moving average, the 200 bar moving average on the 4-hour chart right through here, and stay below that level, moving down to test these lows here in trading yesterday. In trading here today, the price moved initially to the upside, and in doing so, we came back up to this, well, I'm going to call it a floor here. You see a number of different lows, floor area here, where we had a number of different lows come in this area right here, forcing the price to the upside, to the upside. Each of those times on the test of this floor, admittedly, the price got traded above and below this level, and also below the 200 bar moving average on the 4-hour chart. 1, 2, 3 different times yesterday, we broke through that 200 bar moving average. It broke through this floor area, and I mentioned in the video that we needed to stay below this floor area, stay below the 200 bar moving average to keep the sellers more in control, and it did just that. The high price today did find the resistant sellers against the old floor through here as well, giving the tell to go lower. The problem is we do have the 100-day moving average down here, which is causing some cause for pause, and you can see the price is trading above and below that level at 126.38. If we get below that level with more momentum, then that would open the door for further selling pressure with the 50% retracement and 200-day moving average as major targets on the downside. So that's my Kickstart video for the 3 major currency pairs: the dollar versus yen, the euro versus US dollar, and sterling versus US dollar. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.